Hi students, my name is Akshay Kadolkar. Okay, so this lecture for BBA second sem, so on corporate accounting. Okay, so this in the last lecture we saw the syllabus of corporate accounting 1. Okay, so whatever the concepts are there, so we saw. So now in this lecture we will see the module number 1, which is the accounting for issue of shares. Okay, so actually as per your syllabus, this module is accounting for issue of shares. It is module number 2. Okay, so but I will take this first. Okay, so accounting for issue of shares. Okay, so we will start this with this accounting for issue of shares. Okay, so in this next slide, so see the meaning of company. Okay, so now see what mean by company. Company, it means what? It is an artificial person created by law having separate entity with perpetual succession and common seal. So this is nothing but the company. Okay, so company means what? It is an the artificial person. So artificial person means what? It is created by the persons. Okay, which is created by the person, and it is created by the law. Okay, for the company purpose some rules and regulations are there. Okay, what's rules and regulations are there, and it's a separate entity. So company or business, it is in the separate entities there, and so with perpetual succession and the common seal. Okay, so perpetual succession means what's the if it when if you form the company, formation of company, it will the continue year by year, it will not the wind up. Okay, so in the common seal, the common seal means what? In the all the official documents, the company is having one common seal. Okay, so this is about the meaning of the company. So for these subjects, the earlier name, it was the company account. Okay, so that's why the company's meaning is required. Okay, so now see the types of shares. What types of shares? Okay, so you know what do you mean by shares. Okay, shares means what? The small part of the capital is nothing but what's the shares. Okay, types of shares means what's the small parts of the capital is nothing but the shares. And there are two types of the shares. Which are those two types? Equity shares and the preference shares. Okay, equity shares and the preference shares. So now see what do you mean by equity shares. The equity shares are those shares which does not get preference shares in case of payment dividend and the repayment of capital. Okay, so in a simple language, equity shares means what? Those persons are taking the equity shares from the company, so they will be the real owner of the business. Okay, the real owner of the business, and they will get the right to vote for the selection of the board of director members. Okay, they will get right. Okay, but they will not get the right to take the first payment of dividend and the repayment of the capital. Okay, so this is about the equity shares. Okay, so now see what in by preference shares. The preference shares means what? Preference shares are those shares which gets preference over equity shares in case of payment dividend and repayment of capital. Okay, so preference shares means what? Preference shares will get the rights to take the dividend and the repayment of the capital. Okay, so now you know what I mean by dividend. Okay, so dividend means what? It is the some part or some percentage of the profit of the business or profit of the company is nothing but the preference shares. Okay, so but the preference shareholders will not get the rights to vote for the selection of the board of directors, or they are not the owner of the business. Okay, but the equity shareholders will be the owner of the business. Okay, so this is about the types of the shares. Okay, so in the next slide, see different phases of share capital. Okay, so there are different phases are there. So which are those phases of the share capital? Authorized capital, issued capital, subscribed capital, called up capital, or the paid up capital. Okay, so these are the 5 phases are there. So now in the next slides we will see one by one. Okay, so now see, this is the first one. This is what's the authorized capital. So authorized capital, it means what? Authorized capital is the amount of share capital which a company is authorized to issue by its memorandum of association. Okay, so this authorized, it means what's the authorized capital. Okay, so it means what's the, for the formation of the company or for the registration of the company or the incorporation of the for the incorporation of the company purpose, the two documents are required. So which are those two documents are required? The memorandum of association and the article of association. These two documents are the required for the incorporation of the companies. Okay, so in the memorandum of association, it includes it what am I memorandum of association, it is document is what it's specify the objectives of the business, what is the reason behind to start the business or the company. Okay, it is mentioned in the memorandum of association, and some clauses are there in the some clauses are mentioned in the memorandum of association. So which are those clauses? Like the name clause, register clause, office clause, on the capital clause. Okay, so now seeing this capital clause, so what am I authorized capital? In that capital clause, the registrar, what the registrar will mention only that whatever the capital will mention, no, that only that much of capital only can raise by the business. Okay, it means from the public. Okay, so suppose if it is mentioned for this suppose xyz business is there, and for this xyz business purpose, if it is register is given only rupees 50 lakh authorized capital. Okay, so this xyz company can raise from the public up to only 50 lakhs only. Okay, not behind that. Okay, so this is about the authorized capital. So next is what's the issued capital. So now see, issued capital, it means what? It is that part of authorized capital which is actually issued to the public for subscription, including the shares allotted to vendors and the signatories to the company's memorandum. Okay, so the issued capital, it means what? It is the part of the what's the authorized capital. In this issued capital, the company or the business cannot raise the fully or whole authorized capital at a once. Okay, at a once they cannot raise. Okay, so this is about the issued capital. So next, subscribed capital. So now see, what am I subscribed capital? It is the part of issued capital which has been actually subscribed by the public. Okay, so it is subscribed by the capital, subscribed by the public. So it means what's application received by the public. Okay, so it is capital is what's the application received by the public. So this is nothing but the subscribed capital. In the next slide, so see, called up capital. So what am I called up capital? It is the part of the subscribed capital which has been called up by the company. A company does not call at once the full amount on each of the shares it has allotted, and therefore calls up only such as it needs. Okay, so this is about the called up capital. So called up capital, it means what? Suppose ABC company is there, and so this ABC company is issuing the shares to the public. Okay, and the each share price is rupees 10. Okay, how many rupees? Rupees 10. So now these 10 rupees how will raise from the public? Okay, so now how it will raise? So they will bifurcate this 10 rupees, it will be the bifurcate into calls. Okay, so now how it will be the bifurcate? The first call will be rupees 5, second call will rupees 3, and third call will rupees 2. Okay, so this 10 rupees, it is bifurcated into three ways. Okay, in the three calls. So now one by one it will be the call. Okay, the first call will be for the 5 rupees, and after some period or after some months they will again call for the second call for rupees 3. Okay, and after collecting this, after some period or the some times again they will call for the third for rupees 2 rupees. Okay, so it means what is the called up capital. Okay, so next is what's the paid up capital. It is that part of called up capital against which payment has been received from the members on their respective shares in response to the calls made by the company. Okay, so called up means whatever the collected. Okay, actually whatever the payment made by the people shareholders to the company. Okay, whatever is received is nothing but the paid up capital. Okay, so now see in the next slides, issue of shares. Okay, issue of shares, there are three issue of shares: issue of shares at par value, issue of shares at premium, and the issue of shares at discount value. So now see issue of shares at par value. Okay, issue of shares at par value means what? It means the issue of shares at a price equal to the face value of a shares. Okay, face value of shares. Okay, so whatever the business is issuing the shares at par value, it means what's at the face value, it means what's at the original value of the shares, is nothing but the par value. Suppose one share is there and the original price of the share is rupees 10. Okay, and the company or the business is issuing the shares to the public at rupees 10 only. Okay, for rupees 10 only, is nothing but the par value, issue of shares at the par value. So now see what mean by issue of shares at premium. So now issue of shares at premium means what's the issue of shares at a price higher than the face value of the shares, higher than the face value of the shares. Suppose in the earlier example we saw what, so one each share price is rupees 10, it means what's the face value or the original value of the share is rupees 10. But in the premium means what's, suppose this shares is issuing for rupees 15. Okay, rupees 15, it means what's 5 rupees, it's what's the premium. The face value share is rupees 10, but the issuing price is rupees 15, it means what, it is the premium, issue of shares at the premium. Okay, so now see third one is what, issue of shares at a discount value. So discount value means what, it means the shares, issue of shares at a price less than the face value of the shares. Okay, the shares is issuing less than the original value. Okay, suppose the shares price is rupees 10, but original price is rupees 10, but the company or the business is issuing shares at rupees 8. Okay, so it means discount is given. Okay, so this is like the issue of shares at a discount. Okay, so now in the next slide, see calls in arrears. So calls in arrears means what, so if some amount called in respect of a share is not paid before on call the specific date fixed or payment, such amount which is not paid is called calls in arrears. Okay, so now see in the earlier example I given, so the ABC company is there and ABC company is issuing shares and the each share price is rupees 10, and so this 10 rupees it is bifurcated into three calls, rupees 5, rupees 3, rupees 2. Okay, suppose call scenario means what, suppose the company is called for the first call rupees 5, the person paid that 5 rupees, the again some period or sometimes business again called to that persons to pay second call rupees 3, the person is unable to pay that rupees 3. Okay, so it is, if it is not paid by this second call rupees 3 to the company, so it is nothing but the calls in arrears. Okay, it's calls in arrears. So next one is what's the over subscription. So now see what in by over subscription, the public may apply for more shares than of those offered to them. Okay, so when the public apply for more shares than those offered to them is called over subscription. Okay, so it is the, it means what's the more demand for the shares. Okay, it is more demand for the shares. Suppose one ABC company is there and this ABC company is issued, okay, or issued how many shares, 100 shares. How many shares issued, 100, but the subscribed is a 150, but demand is 150, person is demanded for the 150 shares. Okay, so it is the 50 shares it is subscribed more, so it means what, the over subscription. Okay, so next one is what's the under subscription. So now see what in by under subscription, when the number of shares applied for by the public is less than the number of shares offered by for the subscription is called under subscription. Okay, so it means what's the less demand for the shares. Okay, so it is the less demand for the shares. Suppose if the company is offered how many shares, 100 shares, but the subscription is only 80 share, 80 shares, it means what, the 20, it's the under subscription. Okay, so this is about the under subscription. Next one is what's the forfeiture of the shares. Okay, forfeiture of shares, it means what, forfeiture of shares means cancelling the share for non-payment of calls due. If any shareholders does not pay the amount of a call, the company may exercise the power to forfeit those shares. Okay, the forfeiture of the shares means what, suppose if it is shareholders is unable to pay the call, okay, call money to the company, then the business will cancel the rights of the shareholders. Okay, rights of the shareholders is nothing but the forfeiture of the shares. In the simple language, forfeiture of the shares means what's the cancellation of rights of the shareholders for unable to pay the call money to the business is nothing but the forfeiture of the shares. Okay, so all the concepts are over related to the issue of shares. So I hope all of you will be the understand, and in the next class we will see the how to pass the journal entries, okay, in the issue of shares. Okay, I hope you will be the understand. So thank you.